Hello traders, Gary Wagner here just before 10 o'clock in Honolulu, before 4 o'clock in New York. It is Wednesday, May 24th, 2017, and this is the Daily Report for Gold and Silver. This morning, the Federal Reserve released minutes from the most recent FOMC meeting, which was held earlier this month. And there was quite some interesting information revealed through those minutes. We'll go through that in detail as we pull up our technical studies, but we had a very interesting net result, and that was the dollar ticked lower, gold ticked higher, silver ticked higher, equities ticked higher. So it seems as though the rate hike, which is highly perceived to be on track for June, has been factored into current gold pricing. To the board, we're not closed yet, but currently we're trading up about $1.60. When we look at gold futures, this is most active June at $1257.10. Now it's traded to a low of $47.60. That low is important because of our stop, and a high this morning of $58.20. We are just about 80 cents off of the high on the day. Silver also trading higher on the day, up about 1/3% at 17.19.5. The net change almost 6 cents with a low of 16.89 and a high of 17.20 on the day. So as you can see, precious metals are not only trading higher, but trading near the highs of the day. It seems as though much of the belief that there will be an interest rate hike in June has in fact been factored into the market. I say this by virtue of the fact that when the minutes were released this morning from the FOMC meeting earlier this month, we saw gold tick up, silver tick up, equities track higher, and the dollar track lower. As I said, currently we have gold trading up about $1.80 to $2 higher. That is basis most active June. We have rolled over into an August contract, which is currently trading up at around $12.60.50. So the spread between these, the most active and our August month, currently sits at roughly $3. Now, the low of the day came in at $47.60. Our stops are below 45. So we did not get into any real danger as to our stops being hit. But here is what I'm noticing that I find most impressive. We talked about the fact yesterday that although we had a golden cross, this is our 200-day in red, our 50-day moving average in blue, and we talked about the fact last week that we saw a cross in the market. That occurred roughly 3 days ago, or that would have been Monday of this week, excuse me. And yesterday's downside move, of course, challenged the fact that the price point of gold was currently trading above these moving averages. We actually had a low that came in below the 50-day. However, nothing of the trading range yesterday really went into our 200-day moving average trading range, and the 200-day is currently sitting at 12.4820. To me, that is a pretty critical level that gold has to hold if we're expecting it to recover from this congestion that we have seen recently and begin to move to higher ground. Today, with this, even with this modestly higher move, as long as gold closes in this area, it has had a low that was above the 200-day, and current pricing is now well above, as it was, the 50-day moving average. And it seems as though, at least for now, we are out of some sort of danger in terms of seeing this market retreat. So following the pretty sizable rally that we got as this market traded just from about 1200 to about 1260, we now have somewhat of a compression triangle coming into the market, in that we're having a series of lower highs right in here and higher lows right in here. And so that tells me that we're very close to the apex, and the markets will typically break to the prominent direction of the trend, which in this case is up. So I would look for some sort of upside breakout in the very near future. And traders, when we convert our daily candlestick to a daily Japanese average, we can also see that the upside momentum has waned quite a bit, and we have now gone to a red candle, and that's based, of course, on the midpoint of yesterday's trading activity. But as I said, I would expect this market to consolidate in this area and then move to higher ground. And traders, lastly, we have gone ahead and converted our daily chart back to a weekly chart, and this weekly chart is now back to standard candlestick format. We identified a 3-candle pattern, simply called a three-river morning star. And this week we are looking to see if we get a confirming candle. As of yet, we have not gotten it, but we are back to an unchanged territory on the week. To get that confirming candle, we will need to see this week close out with a higher close than Monday's open. That would make it a green candle, and I would like to see a higher high and a higher low. Now, we have certainly gotten the higher low so far, but we would need a considerable move to make it green, and even a small green candle would give us a higher close on the week. And traders, that of course differs from silver, in that silver seems to have a lot more strength. It was also, in my opinion, a lot more oversold as the market came down, trading under more dramatic pressure. We know that by the retracement levels that these lows went to, which were well below the retracement levels we saw in gold. Also, when we take a look at the most current candle, as you can see, it is a fairly medium to large size green candle, which means we have effectively seen a strong gain in value in silver this week. My current recommendation is to maintain your current long positions in both gold and silver, as well as maintaining your current stops. So traders, in other markets that we follow, very interesting activity not only in U.S. equities, but in the U.S. dollar. I did receive a question from one of our subscribers yesterday about my comment about the U.S. dollar and my statement that I believe that the dollar would track lower over the upcoming short-term next couple of days to next couple of weeks. And the rationale behind the question was, with a rate hike that is imminent in June, wouldn't that be bullish for the U.S. dollar? My short answer to that is yes, it would. However, my belief is that much of the anticipation of a June rate hike has been factored into current pricing. So once the announcement came, or once the minutes were released today, we actually saw the US dollar begin not to trade higher, but to trade under pressure, currently down 0.25% at 97.02. I draw your attention to this daily chart where we have one pretty long fib retracement, which goes from about 93 to just shy of 104. The critical 61.8% retracement comes in at 97.14, and we are absolutely below that particular price point. It will be interesting to see if we can close above that in the next couple of days. My belief is if we continue to see this market track under pressure in terms of a support level on a technical basis, we have support that sits at 96, and it's fairly major support. And then, of course, we have a 78% retracement, and that comes in just below that price point at about 95.61. So my sense is we could see further erosion in terms of dollar index value. And then traders, lastly, we have talked about infinitum, time and time again, new all-time record highs in the NASDAQ, because the NASDAQ, the tech-heavy index, has been outperforming the other sectors, such as the S&P 500 and the Dow Jones Industrial Average. However, it is most noteworthy that we are currently trading at 2404.58. If we close here, which is highly likely because we're only about 45 minutes away from the close, but a close in this area would really break the current record, which has a closing price right here at about, what, 23.98, just shy of that area. We can absolutely see, and these are weekly candlesticks, that we are now in all-time record territory. These last couple of weeks are red candles, so we're closing on the lower line of the rectangle. On the green candle, this is the highest close on record, which comes in roughly 3 weeks prior to this, and we are definitely, without a question of a doubt, above that price point today. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.